Morning, guys and gals. If we have some in here, good morning, good morning. Um, Hope everyone's doing well. Hey, what's going on, Ron? Steve, nice to see you. Hope everyone's doing all right today. Hope you're feeling good. I guess there was a big old spike at 8:30 a.m. this morning in the market. My brother sent me a message. He goes, "Wow, that was a quick 3 grand." Good morning, Al. Good to see you. Um, Guys, that spike was predictable. We knew that it was coming. Yeah, it is, Ron. I agree 100%. Every day above ground is a good day. We knew it was coming, or at least had the potential to come, because of forexfactory.com/calendar. I check this every morning. I would encourage you to do the same thing. Just make sure you know when news releases are coming, specifically high impact and medium impact, guys. These are the ones that really create a little turmoil in the markets, really set someone off in one direction or the other, and it's pretty much impossible to figure out which way they're going to go. So I come in every morning, I go straight to this link, I sip my coffee, I open my charts, and I say, all right, at 8:30 a.m. I've got 3 red boxes and 1 orange box, so at 8:25 a.m. I'm going to walk away from my computer. I'm going to go refill my coffee or toast a bagel or eat a waffle. Maybe I'll send my wife a text and tell her I think she's pretty. Anything other than stepping in front of that emotional freight train. So just a good routine to get into. Everything that I talk about today, guys, it's going to come from the Nexgen page. It'll come from the trading guide. All the answers. I can't stress that enough. Golly, I don't know why it keeps doing this. I think I've got a virus. Good morning, Miss Cindy. All the answers come from this page, guys. All the information, everything you need, it all comes from this page. And there's no secrets. What a great thing, right? Hey, good morning, Chef. It's not, hey, do me a favor, buy some software, and then in a month when you feel like you don't have enough, let me sell you some more software. Guys, you have access to everything that you need. And this is day 2 on this new PowerPoint that I'm doing. So again, I'd love feedback on it if you guys have any problems with what I'm doing with this. But we're going to talk about a high probability trend trade this morning. This is what we talk about every day. And it's funny because new users are like, he says he does this every day, but does he really? And by the 5th day, you're like, oh my gosh, this guy keeps saying the same thing over and over and over. Good morning, Rob. And guys, I do this because this is how you get to where you want to be. Repetition creates recognition. This is your favorite 3-hour study date right now, and we're just going over what we're going to need for the test. I'm going to share right now in the room. This is a document that I wrote over the weekend. This is my attempt to make trend trades as simple and the learning process as efficient as it can be. Please take a look at it if you're learning trend trades. Let me know if it helps. So far the feedback's been good. And this PowerPoint that I'm using this morning is based off of this document. Most of the pictures, the links, everything almost in the same order. So I'm going to drop my PowerPoint in the room too. Drop these into a folder. Go back and study them. Looks like the rules for the high probability CD. I don't know what that means. Oh, the high probability chili dog. I don't know why that escaped me. Guys, the high probability trade. Each indicator on every chart agrees for the trade. And you're right, Ron, that does look like it, doesn't it? Typically, this is when the triggers are the strongest. This is when no termination conditions exist. And this is when there's no trouble spots between your entry and your target. This is a high probability trade. So Ron, I think you're right. I think the chili dog fits that description. We use this trade in the beginning for you guys for a very specific reason. One, this is a trade that typically wins more than it loses. When you follow the rules, when you learn them, this is a trade that has the potential to win 70 to 80% of the time. There's that old saying that confidence comes through the memory of success. And if I'm successful 70 to 80% of the time in anything, I'm going to develop a little bit of confidence, guys, and I'm going to start feeling good about the methodology. And to be honest with you, I'm going to try to repeat and do the same thing every day because I like the way confidence feels. I like the way success feels. But most importantly, what this trade's going to do for you is it's going to teach you to read your indicators. You're going to learn to read your charts, guys. Your indicators aren't magic. They feel like magic when you learn the patterns. But all they're doing is they're giving you information. They're letting you know if you have what you need to feel confident in the trade that you're taking. I'm afraid to know what it's trying to fix it to, Ron. Ron had his coffee this morning. So we talk about this trade not with the goal of making you this master trader ready to take over the world, but rather to teach you to become a chart reader, to learn how to read your indicators, to grab that information that the indicators are giving, to speak to yourself in terms of advantages, and then just turn those advantages into an entry. Chart reading is about 90% of your day. 10% of your day is actually trading. Just to give you an idea of what that means, is that if you spend 6 hours in front of your computer every day, you are likely to be in the market maybe 36 minutes. Maybe. Most people tell me it's more like 95% of your day doing nothing. But that's not a lot of time. And you'll also hear from the more experienced, the successful traders, that they don't take 20, 30 trades every day, that they're taking 3, 4, 5 trades every day because they have these advantages and it's paying dividends. That's when their profits tend to be the highest. So we're going to focus heavily on chart reading. I'm going to break it all down for you. And once you start to get good at it, once you start to learn these lessons, start to incorporate them into your chart reads, you're going to understand some very key concepts. You're going to understand where the market is likely to continue. Initially, this is going to be your entry for the highest probability trend trade. You will understand where the market is likely to go, and this is where you're going to start setting those profit targets, and you're going to understand where the market is likely to stop. And not only will you probably exit at those likely to stop areas, but you won't take that next trade. You'll say to yourself, this is an area on my chart that could create a reversal, that could create a bounce, that could rob me of my money. And you're going to be able to do all of this through 3 rules. It's only 3 rules to recognize the high probability trend trade. Each rule, when met, provides an advantage. So the rules are in white and the advantages are in yellow. And you'll notice that it says a trade equals. The recipe for a trade is momentum plus a clear path plus an entry area. And it's very much like baking. If you've ever tried to make a cake and you're like, you know what, I'll just omit the flour because I don't do gluten. Well, you don't end up with a cake. So the recipe for a trade is a combination of these advantages, and the advantages are provided through the rules. So rule number 1 says strong trigger lines, and that provides me the advantage of momentum. Rule number 2 is no termination conditions. Those are those likely to stop the areas. And when I have that rule true, I have a clear path. I have room to my profit targets. Now, rules 1 and 2, momentum and clear path. Guys, this is the core of everything that you're going to do in this market. Momentum and clear path is the foundation. And once you understand momentum and clear path, once you can identify these 2 rules, and it won't take you long if you keep your focus studied. If you look for the advantages rather than the trades, you'll understand these quickly. Momentum and path is enough to create a very profitable, a very consistent trading plan. So you guys should be focusing on these first 2 rules. Make sure you understand them. And then the entry area, this is specific to the high probability trend trade. And your entry areas will change. Your trading styles will change. Good morning, Philip Cox. Once you understand these first 2 rules, you're going to find your trade. You're going to find what speaks to you. But until you do, we're going to focus on the high probability trend trade because that's the one that's creating confidence through the memory of success. These 3 rules happen on only 2 charts. That's all you need, 2 charts. I break everything down to the most simple terms I can come up with. If you find a way to do it easier, let me know. We'll incorporate it into the training. There's a large chart and a small chart. And this large chart gives a lot of information. This large chart tells you the direction of the market, which direction you should be trading. It defines the momentum in the market. It lets you know that not only is the market going up, but it's going up fast, or it's going down and it's going down fast. And it defines the areas. Your large chart's going to let you know which lines are problematic, or which lines are targets, or which lines need to be cleared before you look for that next trade, guys. And your first two rules, momentum and path, those two advantages, they come from the large chart. This very broad stroke of a brush. It's a slow moving chart showing the overall opinion of the market. And it's such a slow moving chart that you will get all of that information in the most current bar. One bar on the large chart defines direction, momentum, and areas. It's pretty cool. And then once you have it, you're going to go to a small chart, a faster chart. And this is your x-ray of that one bar. This is where that one bar is broken down on a smaller, faster chart into 20 to 30 bars. And you're going to use that refinement process to pinpoint your best of the best entry. And by breaking this bar down into all of these bars, you're going to reduce your risk. You're going to maximize your profit potential, guys. And rule number 3 is designed to get you into the market where the market is most likely to continue using that refinement process. We use these two charts. Novak men are horrible at analogies, but this is the best one I've ever seen my brother come up with. Ask yourself who you're trading with or who you're trading against. Who are you trying to be a part of, which group, or who do you want to fight? Because it's the large chart. This is the large crowd opinion of the market. These are the men and women that have the influence and the money. And when they wake up and scratch their heads and say, hey, what a great day for the market to go up, that market goes up or down or whichever way they want it to go. So these guys are creating trends, and these guys are producing that momentum that we need through rule number 1. And this large chart, this large crowd people, they're also reacting at those key areas. And we know precisely where their decision-making process is probably going to be, and we can choose to not be a part of their fights. Then your small crowd, that refinement chart, inside of that one bar that gives us everything we need, these guys, you'll be able to see the fight that they put on. And this is a small chart. There's a lot of fluctuations on this chart, but we rely on that fight from the small crowd to try to make a market that is hell-bent on going up, go down. And it creates what we call a retracement, which is just a little push against everything that the large crowd wants. These guys fail typically 70 to 80% of the time, which means that when you use rule number 3 to pinpoint where their failure is most likely to happen, you have the potential to win 70 to 80% of the time, guys. So it's very much a 2-chart process, but remember who you need to be trading with. Don't let this small crowd, these guys that fight, these ladies who fight, don't let them seduce you. Go with the flow, guys. And this is your path. One of the most ignored paths in all of education. There's a pretty easy path to becoming a confident trader ASAP, and it's via becoming a chart reader ASAP, guys. And there's 2 things that you need to do. You need to post in the room. This room is a conversation. It's a dialogue. It's not a lecture. It's never been intended to be a lecture. I want to hear every question in your head. I want to see every trade that you take. I want to see if you look at your charts and you say to yourself, man, Mark, what are these yellow dots? Guys, take a picture of it. Draw an arrow and say, hey, Mark, what gives with the yellow dots, right? And then once you have that picture, just copy it and drop it in the room. And what happens is you get a custom lesson. Hey, let's talk about yellow 1-to-1s. Let me tell you what they mean. Let me tell you what they mean to you in terms of trading. Because these yellow dots, you don't want to trade into those. Those are areas that might stop the market. And you'll be like, oh my gosh, I'm just a little bit better right now. Thanks, Mark. Every picture you post in this room is a private session. Every picture you post is the pathway to getting the answers you need to be comfortable and confident, guys. So post in the room. You're going to simulate. If you are on demo, if you own software, if you're on a lease, you have everything that you need. And the only thing you really have to do is practice. So keep it on simulator. These are your batting cages. This is your driving range. Practice trades. Practice following rules, because rules have been proven to win more than they lose. Don't practice the wrong trades, guys. If you get that gambler's high, oh, I'm just going to jump into the market, 100 contracts, fight everything, and I'll pull it off at 2 ticks, and I'm $2,000 better than I was, and look at how smart I am. Man, it's fun in the moment. But it sets you up for a long-term failure, guys, because the market has a memory. And what we're doing is we're focusing on a pattern that's ingrained in that memory, a pattern that wins more than it loses, and luck runs out, usually right about the time you go live. So make sure that you're getting feedback. Make sure that every time you take a trade, and let me show you this right here. Here's how to get the best feedback. We only talk about 3 rules for an entire hour. Every time you post in my room, I want you to describe those rules. I want you to talk about the momentum. And guys, here's the great thing. You don't have to be right. I just want to know what you think. I want you to describe momentum. I want you to identify your clear path or lack thereof. And I want you to find your entry area, put a circle on it, and show me that trade to completion. Because every time you post in the room, like I said, it's a private session. We're going to talk about your chart read. We're going to talk about your entries. We're going to talk about your exits. If there's anything that I see in my 5 years of experience that can help you do what you do better, that can help you read your indicators more clearly, you're going to get it out of me. Sometimes I'll just take your charts and I'll turn them into a great lesson for the whole class. Be prepared for that. The people that post the most get to where they want to be the fastest. This has been the case for as long as I can remember. You have to simplify in the beginning. You have to break it down and keep it easy. Don't chase the money. Don't chase all the trades. In the very beginning, chase the advantages. Learn to speak to yourself in terms of advantages. Learn what looks you'll commit to, guys. Every rule has a specific look, and I'm going to teach them. I'm going to break them down individually. You have to learn these looks so that they become easy. You have to be able to put them together so that you recognize the pattern. And once you recognize the pattern, there's a couple things that happen. First, the market slows down. It doesn't seem as intimidating or fast. And you're like, wow, I know exactly what I'm looking for. I can almost anticipate and call my shots now. I know where that market needs to go to get in. You're also going to begin to recognize things that happen outside of your plan. And this is how plans grow, guys. The more time you spend studying the market and the patterns, the more patterns you find yourself seeing. So we also give you a spreadsheet every day. I drop it in the room every day. Most days I add to it, so that's why I drop it in every day. I save it at the end of my classroom, I drop it in. Maybe there's an extra picture in there. But the first tab is trade tracking. The first tab is every time you take a trade, win, lose, or draw, especially lose, get the picture into your spreadsheet so that you can come back and study it tomorrow. Talk about the advantages that you had. Win-loss is irrelevant as you learn patterns. I'm going to lose that one. Talk about your advantages. Define what kind of trade it was. But most importantly, take some time typing out the feedback. Look at that. That just made feedback section even bigger. Talk about the feedback. Write it in there. What did Mark say about my trade? And guys, sometimes it's the perfect trade, and that's your pattern. Make sure that you write that so that you can study the pattern. Sometimes there's a tiny little thing that you missed. And I'll tell you, and you'll be like, okay, I've got to look for this tiny little thing next time. And sometimes you're just kind of getting all loosey-goosey on it and breaking rules and hoping. And I'll tell you, it's iron fist and velvet glove, but I will tell you. And what you'll do is you'll start to recognize when you get the same feedback over and over, whether it's perfect or hurting you, and you'll start to focus on these patterns. You'll start focusing every morning from a little bit of study. Hey, this is what I did great. I'm going to try to repeat it. This is what took the money right out of my account. I'm going to try to avoid it. And it takes about 5 pictures from you guys in my room for me to recognize what your thing is, whether it's early entries, crazy stops, trading into areas, whatever your thing is. By the 5th picture, I'm going to know it, and we're going to work together to fix it. But again, you have to have a foundation. So the second tab, these are the rules for the high probability trend trade in green. These are the pictures of what it looks like to have strong triggers. Every chart in this spreadsheet is annotated by me. This is the look. This is what it means to you. And this is what it looks like in the red to not have that advantage. And there's your clear path, and this is what it looks like in the red not to have that clear path. And look at this. I've put almost 80 pictures of those termination conditions, those likely to stop areas, in there for you already, because that is the most broken rule among new users, because this is the one that forces you into that 90%. Then there's also pictures of entries. Coming to the third tab, this is where I steal from you guys every day, and I don't care. You can't stop me. Guys, this is the entry sequence to go short, to go long. Exactly what you have to do to pinpoint precisely where the market is most likely to continue. Almost 400 pictures of Nexgen users taking these advantages and finding success. And even sometimes, and if I scroll down here, you'll see some that say perfect long didn't work, perfect short didn't work. Because anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And just because it's a loser doesn't mean it was the wrong trade. It's the cost of doing business. And I'm trying to get you focused on recognizing patterns rather than basing your success or failure on whether the trade won or lost. So we're only looking for patterns, guys. There's the most mechanical management approach I could ever give you. I will give you a plan for this. And then you'll begin to grow. The more you see, the more you grow. So there's a whole pattern dedicated to, or a whole section, excuse me, to patterns that repeat themselves in the market over and over. Some of these will be used for entry, some will be used for management, some will be used for avoidance. But your job is to start taking pictures day one, to start taking pictures of patterns, of things you see, of things you wonder, of things you want, and drop them in the room. Get a little feedback. Make sure that the pictures are good, that they're beneficial, and drop them in here. Here's your setup looks. Here's your management things. Here's the patterns you see. But pictures, it's all about the pictures. I want you to see my library count for 2025. I'm up to almost 380 so far this year. We're halfway through the first month. And I'm coming up on 400 pictures quickly, guys. Everything I study, I don't hope I remember. I take a picture, I write on the chart, and I make sure that I create that connection and I remember it. Doing the same thing will pay dividends for you. So you will have everything you need by the end of this classroom to be successful with the software. You'll have rules and a solid plan designed to optimize your chances of success. I'm going to break each rule down individually. I'm going to teach you how to study it, and I'm going to give you study guides to help you along the way. You're going to have checklists to get you into the trades. You're going to have everything you need. I've already given you the PowerPoint that I use. I've already given you a Word document that breaks this trend trade down even more basic. So without further ado, let's start by just identifying what we're looking at. As a brand new user, it feels like there's a lot going on. We use triggers and areas. That's it, triggers and areas. And triggers, there's two sets of triggers, guys, and it takes two lines to create small triggers. Solid lines are small triggers. They're a fast-moving average, and whether you're seeing these solid lines on a big chart or a little chart, they're always small triggers. And then large triggers are the dashed lines, and these are the slower-moving average. And whether it's a large chart or a small chart, the trigger lines are exactly the same. The large triggers are always the large triggers. And you're going to use these trigger lines first to define momentum. And then you'll also use these trigger lines to define those likely to stop areas or let you know when those areas are broken. So you don't have to know why they're trigger lines. You don't have to know who created them or the math that goes into them. Just know that you're going to use these for momentum, rule number one, for termination conditions, rule number two. So know the difference between large and small. And then there's areas. Areas are on both large and small charts, and we're just putting a name to them right now. Magenta high lines and magenta low lines, or divergence low lines, divergence high lines. Magenta up top, cyan down low. Every time you hear divergence, I want you to say, ooh, loss of momentum. Every time you see a pink line from a high pivot, I want you to think loss of momentum. Loss of momentum. And that's all divergence is. Momentum doesn't follow price. There's going to be red Fibonacci resistance lines. There's going to be blue Fibonacci support lines. There's going to be yellow one-to-ones. And there's going to be a mid-band that runs through the middle, guys. And we're going to use these areas for entries, for termination conditions. I just want you to know what they are and what they look like. And then we're going to learn the rules. We're going to learn how to use those tools. And we start with strong trigger lines. Rule number one, large chart, big crowd, must have strong trigger lines. Because strong trigger lines give me that advantage of momentum, that first thing that I need to look for a trade. Remember that the large chart will define direction, momentum, and areas. Rule number one will define both direction as well as momentum. And it's going to do it first with the background color. If the background on your large chart is green, you're looking for high probability trend trades long. That's it. You're looking to go with the flow, to follow the large crowd. If the background on your large chart is red, you're looking for rules to be met for high probability trend trade short. Again, just following the overall trend. The trend is your friend. Somebody said that the other day. Is this the only option with the software? Of course not. But we're brand new and we're going to give ourselves the best chance for success. So in an uptrend, when my background is green, your small triggers must also be green. Your large triggers must be green. And then strong triggers means that the small triggers are up and above the large triggers, that the large triggers are wide, they're angled in the direction of the trend. I like to think of scissors that are open because it's the space that's created between the small and large that tells me I have strong triggers. And in a downtrend, when the background is red, both the small and large will be red. And that space created between small and large lets me know that I have strong triggers. And guys, when I have strong triggers up or down, the odds are favorable for the market to continue up with the trend or for the market to continue down with the trend. Odds favorable momentum is what I want you to think of every time you see strong triggers. You're going to see it annotated on charts in this room, OFM, odds favorable momentum, giving the market the ability to push in the direction of the trend, giving us the potential to break key areas using all that momentum. And guys, when I have strong triggers up, that's when I use that refinement chart and I'm going to buy Fibonacci support to go with that trend. That one tail shows me where the market bounced historically. You're going to be able to pinpoint where this tail is most likely to form with rule number 3. You're going to be able to pinpoint where this tail is most likely to form with rule number 3 using that refinement chart, guys. And strength should lead the way. Strength should set the tone. Strength should be what you look for every time. There's those strong triggers down. There's one of those tails. There's one of those pullbacks on a smaller, faster chart. We'll come back to it. Strength to the upside, separation. And the most current bar lets me know that I have odds favorable momentum to the upside. Guys, can you give me a Y if you see it? My background is green. My small triggers are green. My large triggers are green. And sure enough, there is all sorts of space in between those trigger lines. This is the best of the best look, guys. This is rule number 1 being met. But I want to know what it looks like when it's not. So when that market continues down and those small triggers work their way inside the large triggers, we'll call that a closing of the scissors because you can't cut with closed scissors. Guys, this is what we call weakness, weakening the large triggers. When I have weakness, anything can happen up or down. I'm a huge fan of language, painting a picture, guys. Strong, odds favorable. That feels good. I'll put a couple bucks on that look. Weak, anything can happen. That may not be my highest chance of success. When I have weak triggers, this is where that market tends to retrace just a little bit more. When I have weak triggers, this is when those key areas tend to hold. And guys, there's kind of a life cycle. You go from strength to weakness. As you grow with the software, you're going to find more and more opportunities. In the very beginning, odds favorable momentum. This is your best of the best. This is the one that you're looking for, that you're committed to. And then as that momentum decreases, when both triggers are still down, when one of the two small trigger lines is outside of the large triggers, guys, this is the first sign that momentum is slowing. This is where you're literally going to say, holy crap, they're losing a little bit of zip in this push down. And you still might find opportunity. But you're going to have to manage a little more aggressively. You're going to have to make sure that everything agrees because the momentum isn't perfect. And then when you get that weakness, both triggers down, anything can happen. Short trades, you still might find a way to grab hold of the short trade, but it definitely has to be managed aggressively. And then when you reach that area, the triggers are weak, guys, this is where things change direction. This is where big bounces happen. So, rule number one, momentum. Let's just go back on the S&P here. Strength pushes the market down. I mean, this is perfect. There's your weakness and a big retracement. There's weakness again right at a fib. Sure enough, reversal. Every lesson that you need in one run, from strength to weakness to reversal from that, anything can happen, guys. Rule number one is going to set you up to push that market in the direction of the underlying trend. But once you have it, you got to make sure that your path is clear. You have to make sure that there's none of those termination conditions, that you're not trading into an area likely to stop the market, with the potential to stop the market, that may stop the market. Notice that I don't speak definitive, right? The odds are favorable for the market to push. It's not guaranteed. These termination conditions may stop the market, but it's not guaranteed. But we know about them long before we get to them. These are the same areas that I gave you the picture of, guys. Termination conditions are Fibonacci-based indicators that may stop the market, may reverse the market based on a comparison of the area and the T3 trigger lines, the strength and location. So we're going to look at blue Fibonacci support and red Fibonacci resistance. We're going to look for yellow 1-to-1s, divergence highs, divergence lows. We're going to talk about that one, 3 divergences in the same area, and even a large sharp midband, but we're going to use those triggers to define whether or not that midband is problematic. So to define a termination condition, the first thing that I want you to remember is that the large crowd is making decisions at these lines. The large crowd may enter, may exit, may fight right at these lines. So the first step in defining a termination condition is allowing price, those price bars, to reach Fibonacci resistance, allowing those price bars to reach Fibonacci support. When price reaches resistance, you'll see it on the large chart. All you have to do is ask yourself, where are my triggers? If the triggers remain below resistance, small and large triggers remain below resistance, resistance is a termination condition, and it may create an untradeable bounce that could pull you out of a long position. It may create a fight, a lot of indecision, where you find yourself trading repeatedly in that chop rather than just sitting on your hands. And it may reverse the market completely, meaning that your large triggers go from green to red. This reversal from the termination condition creates what we call a strong top. And a strong top is the precursor to the highest probability trend trade that you could ever take. And a strong top is rule number one for several trades that you're going to learn as you grow with the software. So price reaches, where are my triggers, remain below. Rule number two is not met. No trades into that area, guys. Sit on your hands and wait for the reaction. You'll never know what it's going to be. It's either going to bounce, it's going to reverse, or it's going to break. Let's just pump the brakes and wait and see which it is. That reversal, there's your momentum. Down it goes. It starts to weaken, and sure enough, we hit Fibonacci support. And when price reaches Fibonacci support, you say to yourself, where are my triggers? Well, small and large remain above support. Support's a termination condition. No more trades into that area. There could be a big untradeable bounce. There could be a fight that just scrambles right at fibs. And there could be a full reversal, making it a strong bottom. What you'll notice is that almost every fib on your chart elicits some sort of response. And I want you to see this. Remember, these tails are pullbacks on a smaller, faster chart. When I hit the fib, there's that fluctuation, there's that fight. When the price bar dissects the fib, another fight. There's another fight. We get to the mid band, there's a fight. Weak triggers, there's a fight. Fibonacci resistance, there's a fight. Support, there it is again. Guys, you know about these areas long before you ever get to them. The only thing you have to do is develop the patience to not trade directly into them. To just say to yourself, I don't have any freaking idea what's going to happen. Maybe I should do nothing. And I'm telling you, that's your 90%. That's what it looks like when they hold. That's what it looks like when it reverses. But they do break. They break all the time, all day. So There's three things that happen when an area breaks. The first thing is it's a termination condition. Every time you hit a line and the triggers remain below resistance, it's a termination condition. Wait to see what the reaction is. Don't try to predict it. It turns out that none of us are very good at predicting. Number two is when it has the potential to break, and it's just potential. And the small triggers smash through the area. They just rocket above resistance. Typically 2 to 3 points is what I'm looking for. I don't want some little prairie dog thing right here. You want to see that thing smash. And you want it to have odds favorable momentum because momentum can break areas. This look, when the small smash through, but the large haven't quite made it. This is what we call a 50-50 look. And all it does is it references the trigger location because the triggers define whether it's a termination, has potential, or is broken. Price getting there, once it gets there, we're done with price. It's all on triggers. 50% above, 50% below. This area has the potential to break because of the momentum. I will give you a plan to be able to capitalize and take trades, but you do have to manage them a little more assertively because the path isn't clear yet. Your path will never be considered clear until both the small triggers, both lines, and the large triggers, both lines, get above resistance. Now resistance is broken. Now resistance behaves as support. Now your path is clear. Rule number 2 is met until you reach the next area. Market goes up and down. First will always be a termination condition. Price reaches the area. Let price do its job. The big crowd might make a decision here. I don't know what it's going to be. I'm going to do absolutely nothing. And I'm going to wait for the reaction. It's either going to break or it's going to roll, guys. And if it breaks, I'm going to see that potential before it's actually broken. I'm going to see the smalls below, the large above, the odds favorable momentum, and I'm going to say to myself, this may be an opportunity, but it's not a clear path yet. I might have to manage it aggressively. And once the small and large get below support, support behaves as resistance. My path is clear right up until I reach the next area. I'm looking for my rules to met. I'm looking for my entry rules, guys. And there will be times when your path isn't clear over and over. This is at 90%. Maybe there's several areas of support. Maybe there's several areas of resistance. Maybe there is support and the 1-to-1 and a divergence low, and there's just all these darn lines. And you're saying to yourself, I'm never going to make money. Never going to make money. Look at all of these lines. Guys, from the point of impact until it hits that lowest line is a minute and a half. That's it. It'll feel like an eternity, but it's a minute and a half. It's 90% of your day, guys. It's okay. It's okay to do nothing. It's okay to not try to anticipate. The futures markets trade billions of dollars every day. It takes $400 a day to put you in a 6-figure income based on your trading. That's it. You don't have to be in every move. You don't have to be the first one in at the tip top. You don't have to be the last one out. All you have to do is learn how to identify momentum and path and find a way to grab a couple hundred every now and then when the path is clear, when the momentum is strong. So, rule number 2, guys, we know exactly where the market is most likely to bounce. Look at this. Bounce, bounce, bounce. Resistance breaks. It pulls back. Behaves as support. Weak triggers. There's a reversal. Support breaks. Look at this. It pulls right back to it as resistance. And then support sets it up right into resistance where they retest support. A little bit of indecision. Straight to support. Back to 1-to-1s. Back to support. Egads and little fishes, look at support, hold. Guys, if you go back and do even the smallest amount of study on how many times these areas stop the market, create untradeable bounces, you're never going to trade into these areas. You're going to say, you know what, my next one's coming, I'm just going to wait for it. Is everybody good? Will you give me a why, please? Termination conditions, horizontal lines on a large chart that may stop the market. You're going to be so good at this, you never have to trade into them. But go back and study them, learn to respect them. Once I have momentum, once I have a clear path, it's time to look for an entry. It's time to grab a little precision and pinpoint where that small crowd is most likely to fail, guys. So I have to turn my attention to a smaller chart, to a faster chart, to that refinement chart. And if I go to that chart and I see 3 divergences in the same price range, remember, divergence is a loss of momentum. And that big chart is slow. 3 divergences, 3 losses of momentum in the same price range, guys. This is the only time. Write it down, all caps, your most delicious crayon. This is the only time I will let the small chart keep me out of a high probability trend trade. The only time I'll let the small chart trump momentum and clear path on the large chart. This is your small chart showing you change that you can't see on that big slow chart, guys. 3 divergences may terminate the trend. There's that word again, may. 3 divergences might create an untradeable bounce. 3 divergences could reverse the market completely. Becomes even more powerful when I have those anything can happen triggers. We learned that from rule number 1. Smalls inside of the large means weakness. Weakness coupled with 3 divergences, that's a recipe for disaster if you're trying to go short. If that final divergence is higher than the previous, that's a little head and shoulders pattern for you technical indicator guys or patterns guys, makes it more powerful still. 3 divergences on its own is a termination condition. With weak triggers, it's more likely to do some damage the other direction. With that head and shoulders, even more still. But if I don't have those 3 divergences, I missed a picture, so let me go to a picture. Sorry guys, I'm still building this. If I don't have those 3 divergences, I'm going to define my entry area through rule number 3. The precision is amazing. It really is. And the precision is so impactful that you're going to use a limit order. You're actually going to wait for that small crowd to come to you. So you're going to use a limit order, and you're going to buy or sell that pullback that the small crowd presents, that they create, that little retracement counter to everything the large crowd wants to have happen. And you're going to have that limit order waiting in an area. The areas have the same names. We're going to use fibs, we're going to use mid-bands, and we're going to use yellow 1-to-1s. But here's the key to your success. Here's the key to your precision. You're going to allow those areas to be inside of triggers. You're going to allow those areas to be inside of triggers. And your entry chart has small triggers and it has large triggers, the smoother of the two. And these will be used to define momentum the same way we do it on the large chart. But there's a third trigger line on your small chart, and we call this a synthetic trigger. And all this third trigger line is the large triggers from the large chart superimposed onto your entry chart. And we do this because what it does is it creates some accuracy. Because the one phenomenon that seems to be true on any chart, any time frame, is that price returns to the large triggers. Whether it's a big chart or a little chart, price seems to always return to those large triggers. So we've got the 5-1 large triggers and the 13-2 large triggers. And these define where the retracement is most likely to occur, where it's most likely to happen. So I probably reverse these pictures. By having favorable large triggers, and favorable means that your large and your synthetic are one on top of the other, like 2 snakes riding piggyback. By having favorable large triggers stacked wide in the direction, you have the smallest little point here where the retracement is most likely to occur. And then when we put areas inside of it, we've got the least amount of space where the market is likely to bounce. So we're going to buy or sell that pullback at an area inside of favorable large triggers, guys, and that's the verbiage. And that word inside becomes key. So when it's time to look for a trade, this was fun because we built this in class last week together. Once the rules are met on the large chart, the rules have to be met on the large chart, I'll turn my attention to the small chart and find my entry. And the first thing I need is a reversal bar, guys. When I turn my attention to the small chart, everything is going to be rocketing north. Everything is going to be going up. This is a long trade. I'm going to look for where are areas, where are triggers. I know I want these to come together, but I need the small crowd to show up and do their part. I need the reversal bar to signal the beginning of the pullback. The reversal bar is not your entry. The reversal bar typically is the first bar in that down push. So I know that price is most likely to return to the large triggers. I know that my retracement is most likely to happen somewhere from the top of these triggers to the bottom of these triggers. So this is where the retracement may become or may happen. This is not your entry. The trigger lines are not your entry. But now you're kind of defining where the price bars are most likely to go, and we're going to take this big look and we're going to refine it even further with the areas inside. Once I identify the trigger lines, I know where the market may return, and now I need an area. I need a fib, a midband, or yellow 1-to-1s inside of favorable large triggers, guys. And this box is from the highest point of support, Fibonacci support, inside of favorable large triggers, and it will extend to the lowest point of support. That happens to be a midband inside of favorable large triggers. This box defines where the market is most likely to bounce to continue with the trend. This box defines where the small crowd is most likely to fail. We go from broad to refine, and once I refine it, once I find that area, my job, your job, is to activate a limit order and put it 2 ticks above that highest point of support. Because remember that the large chart is in an uptrend, and the large chart has odds favorable momentum, and the large chart has nothing in the way to create a bounce. This is going to be a small crowd fight. I don't expect them to get a whole lot done. I know where they have the potential, but man, I'm going to put my eggs in one basket. I'm going to activate a limit order, and I'm going to hope the small crowd has it in them. And if price reaches my limit order, I'm in a long position. And I'm in that long position because I have the advantage of a market where the odds are favorable for it to continue up via those strong triggers. And I have the advantage of a clear path giving me room to my targets because no termination conditions were present. And I have the advantage of having entered precisely where the market is most likely to continue with that uptrend. And guys, this is your high probability trend trade entry. And all we've done this morning is define how to get into the market, where to get into the market. And you're going to have to study this a little bit. So let's go through a couple of them. In a long trade, when the market is up, when the momentum is strong, when the path is clear, you're going to see all of these up bars. And the fear of missing out is going to grab you by the throat and start choking you. And you're going to say, just jump in. Just jump in. Nothing can stop that momentum. But we're waiting for the reversal bar, guys. We're waiting for that little down push because this is how we're going to reduce risk and maximize profit potential. At the time of the reversal bar, you're going to identify your triggers, large and synthetic, and they'll show you precisely where the market is most likely to retrace. But that's not your entry. You're going to define where the market is most likely to continue through the areas inside, all caps, of favorable large triggers. From the highest point of support, it happens to be a midband, to the lowest point of support, those yellow 1-to-1s, this shaded blue box defines where the market is most likely to bounce and go up with the underlying trend. This shaded blue box shows me precisely where the small crowd is most likely to fail. Your limit order goes 2 ticks above it, and then you wash your hands of anything. You're done. You've done all you can do. You've gotten every advantage and you've pinpointed, and now it's up to the market to let you know whether you have a winner or loser. By defining where the market is most likely to continue, where the retracement is most likely to happen, you begin to understand where the market should not go if this is going to be one of that 70 to 80%, where the market should not go if this is going to be a winner. And anything on the wrong side, and when I say the wrong side, I mean below those trigger lines for a long trade, below where the market is most likely to retrace and change direction, below where the market is most likely to bounce. Any line on the wrong side of triggers is not a part of that window. It's not a part of getting into the market, and this is actually where the market should not go if you're going to have that winner. And that language becomes very important when we start working on management. Where the market should continue, where the market should not go. So in a short trade, everything says down. We're going to wait for the market to go up on a smaller, faster chart. Once I get the reversal bar, I define where the retracement is most likely to occur from the top of the triggers to the bottom of the triggers, but I need something bouncy in there. I'm kicking a soccer ball as hard as I can, and I need an area inside of favorable large triggers. And there is one line inside of those triggers in this picture, and that line defines and represents where the small crowd is most likely to fail and where my trend down is most likely to continue. Any line outside on the wrong side of the triggers is not a part of the window, and this is actually where the market should not go. So when you can define where the market is most likely to continue, you can also define where it shouldn't go. This is your first stop placement, 4 or 5 ticks beyond those triggers. And that stop will get hit. Anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. This is what we call a cost of doing business, guys. This is paying rent on your storefront. This is buying supplies to make your widgets. It's gonna happen. You gotta learn to be okay with that. But there's 2 types of losses. In my opinion, there are acceptable losses when you're trading a pattern that has been proven to win more than it loses. And there are avoidable losses when you forego advantages because you want to be active, because you hope, because you feel like you need the money more than you need the advantages. So focus on avoidable losses when you have everything in place. And more often than not, you're going to get a reversal bar in the direction of your trade. The same way a reversal bar says, hey, let's look for entry, a reversal bar the other direction says, hey, now we're doing everything you want it to do. And this is where you'll move your stop about 2 ticks above it. And you'll reduce your risk. And it doesn't guarantee a winner, but at least your losses are smaller if this isn't one of the 70, 80%. And guys, it's not uncommon to see next-gen users take these great trades, just pinpoint these sniper-like entries, and even if it doesn't work, maybe take 2 or 3 ticks of a loss instead of 12 to 14. So, your high probability trend trade. Guys, if you have questions, please ask. Everything starts on the large chart. I'm teaching you right now how to study this trade, how to go back without having to take a trade to recognize this trade. When I have odds favorable momentum, it's a flow chart. If I have odds favorable momentum, then I'll see if I have a clear path. And you'll notice that my large triggers haven't quite made it above. So this one has the potential to break, but it's not a clear path yet. There's still opportunity. This is historical. This is the 1 bar. I'm going to circle the tail every time I have momentum and path. Every time those first 2 rules are met, or every time it has the potential to break, I'm just going to circle the tail. If that circle shows up on my small chart inside of favorable large triggers, guys, I have a trade. I have an entry clearly defined. I know where my stop goes, clearly defined. I can even see where my stop placement would have gone after the reversal bar, clearly defined. This is how you begin to recognize patterns, guys. And the fastest way to success isn't necessarily taking trades, but rather recognizing patterns. This is crude oil. I think the S&P was showing a little more this morning. So let's do, I'm looking for, this one had the potential to break. This one had momentum and the potential to break. I'm going to circle the tail. Where did it go? Let's just go see what it looks like on a smaller, faster chart. I'm going to scroll back. Not guaranteed to be a trade, but we're going to see what it looks like. Well, there's the first pullback, right to support right on top of the triggers. And that small chart bounced a lot. It never got 4 or 5 ticks below. How cool is that? That might have been an outstanding long. And let's look at the refinement process. If I put a box around that bar, look at all of the indecision on the small chart. Look at all the fluctuations. The fight between buyers and sellers on the small chart, and the large chart never changed. You took that one, Chef, and NT crashed on you. The large chart never changed. Let's do one of those boxes again. And let's put it on that tail with the potential to break, with all that momentum. And it pulled right back to the mid-band. It didn't even make the second correction point. I'm glad it was Sim, Chef. But maybe an opportunity. Guys, you can scroll back all day. There was the one that we did when we talked about momentum. Let's go see what that one looked like. Get away from that news. Whoops. Everything rolls. There it is. Right back to support, right inside of triggers. Guys, give me a Y if you can hear me, please. Anytime you lose sound, please let me know that. Okay, cool. So Morgan knows that it's him. Oh, he lost internet. There you go. And guys, this is why we use the refinement chart. Here the market has the potential to break. Here it looks like a termination condition. But termination conditions are defined on the large chart. Guys, that's the perfect pullback. Right to support, right inside of triggers. Never got above, and it continued down, broke the area. These are the patterns that you're learning. So the one thing that I did is I promised you everything you need to be successful. So once again, I'm going to drop the PowerPoint that I used to teach the room into the chat box. Please download it. I'm also going to drop a Word document, Trend Trade Simple. Please steal it, take it. And then I'm going to give you a zip file that says everything you need, because it really is. So guys, these are your downloads, but I'm going to show you what's in them. The first one that's in there is Chart Reading 101. And this is the one that's designed to make you a chart reader faster, sooner than later, guys. Because in order to get to where you want to be, you've got to recognize some looks and patterns quickly. Nexgen doesn't tell you when to trade. You've got to make that decision on the advantages that you see, guys. This is going to reinforce the lessons that we give every morning. This is going to speed up the process. And all it is taking pictures. And I'm going to say it right now. There's 34 people in this room. At least 32 of you will refuse to do this because it feels like work. I haven't figured out why that is, but it is. I think all you trader types are alphas. And alphas are used to having the answers, and they don't like to feel like they have questions. It's okay to have questions, guys. Take 25 pictures of strong triggers. Even Ellie says ask questions. Take 25 pictures of weak triggers. Know the difference. Commit to one. Same with clear path, terminations, entries. But it's not just taking pictures, guys. You want to talk about the whys. Why are the triggers strong, right? Describe it. What's the advantage? Why is it a termination condition? Describe it. What's the disadvantage? If you do this for each individual picture, guys, the time that you spend typing and analyzing and posting it into your spreadsheet, it reinforces not only the looks, the visual, but the advantages to be had or lost with each look. That's the basic rules section. So if you click on one of these that says strong, I didn't just write strong triggers with a picture. I said all red, smalls below the large, space between, strong triggers, odds favorable, momentum. That's it. That's the look. It has nothing to do with areas. It has nothing to do with the trend. It has everything to do with the separation between the small and the large. If you go through and you take 25 pictures of strong triggers and take the time to annotate it, you are always going to know what it means to have strong triggers, and you're never going to confuse it with weakness. What does that say? These are weak, no momentum, rule 1 met. Hey, but look, these are strong. Rule 1 met. There's the difference right there. One pushes the market, one creates a retracement. Guys, I can't for the life of me figure out why people are so resistant to filling out this spreadsheet. This will make you a better chart reader, and it'll make you a better chart reader fast. Bob, you got it when you downloaded software. There it is again, right in the room. And guys, I already did so much work for you. I've already done this exercise 3 times over in some cases. Get in there, take your pictures. So Bob, I just dropped it in the room. You can either download it. Whoops. You can either download it right there, hit the download button, it'll put in your downloads folder, or you can literally just click it and drag it over to an open spot, whether it's your desktop or into a folder so that you have it. That's the one that I'm looking at right now. So go through this, do this, commit it to memory. And here's the cool thing, guys, is that I'm not saying, hey, here's your one lesson, let's get it done. I'm also giving you the high probability trend trade checklist. Good question. Bob, are you using, everybody should have Capture software. I just gave you the one that I filled out, Bob. I just gave you the one that I filled out. That's the one that I just dropped in the room. Do you have Excel? Do you have Microsoft Excel? It shouldn't be empty. All right, let me close my worksheet real quick. And I'm going to do two things. I'm going to try and check myself because I'm not a techie sort of guy. I'm going to drop this one into the room. Oh yeah, check the tabs too. And then I'm going to open the exact same one. So there's tabs on the bottom, Bob. Make sure that you're on a tab. We'll figure this out. And if it appears empty, make sure it's not scrolled down. You good? Awesome. I'm not the tech guy, but I try to get there. So cool, you've got it. And let me give you guys the next one. The high probability trend trade checklist. So what this is literally a checklist to get you into the high probability trend trade. And is the market coming from a strong top or bottom? Remember, it's not mandatory. It's not mandatory, but it does help. Okay, awesome, Bob. And then we're going to go through putting pictures in it in just 1 second. Defines momentum, defines terminations, defines entry, everything you need. And then one to print out and put on your desktop. I've never had anybody in the history of this do worse than 70%, guys. Never in the history of it has anyone done worse than 70%. I've never seen it happen. Nobody's ever told me that it's happened. And I think that if you go through and learn this, you're gonna understand that there's a huge advantage to be had with it. I'm gonna try to download this because I think that I took it off of my computer. So TechSmith Capture is what is downloaded on your computer when you download the software. And this is how most people, I can't wait, Bob. This is how most people take their pictures. There it is right there, TechSmith Capture. So if you have this up, guys, this is what we're gonna do. Stomp that capture button. And it's going to let you pick where you want to take the picture. So just click and drag. If I left click and drag down and to the right, I create my boundary. Once I release, it's going to ask me if I want to take a picture or a video. I'll capture that picture. And then here's my image preview. And this is what I just took the picture of. So up top, there's arrows. I can point to entries. I can point to termination conditions. I can put shapes around entries and exits or things that I want to talk about. But the most important thing that you can use is this call out button. Left click, drag it, make a box. And man, talk to me. Talk to me in purple if you want to talk to me in purple. That's just weird. Talk to me in black. Just talk to me. Tell me what you see. Tell me why. Tell me why you did what you did. And then once you do that, click the upload button. And once you click the upload button, it's going to send you, it's going to get you into screencast. It's going to give you a screencast link. Copy it, drop it in the room. There's your free private session with me. And then it's on your clipboard. So Bob, here's how we're going to put it into the spreadsheet. I'm going to right click and I'm just going to paste that link in there. appscreencast.com, NKVMVF. That gets the link in there. But guys, my OCD isn't cool with that. Not at all. So go to the Insert tab and click that link button. And what that's going to do is it's going to take this screencast and we're going to turn it into a hyperlink. So once again, I'll paste the link into the address the same way I'm going to Google or eBay or whatever. And then under text to display, I'm going to put loser long or awesome short. However I want to describe it. And then once I click OK, now I have that hyperlink, Bob. I can come back and I can study these every morning to see what I did. And the cool thing is once you do that hyperlink 2 or 3 times, you'll be able to right click and it'll just default you to link. And then I click that link and I just pop it in real quick. And I'm all good. So you can put pictures of trades, pictures of rules. You can, well, I just go study those. And then you can begin to put those in there and build your best plan. Great question. Thank you for asking me that. If you go back to editing, one of the things you can do in the room is you can just click copy to drop in the room, paste it right in the room, and then we're there for discussion. But remember that posting in the room is the first step in getting to where you want to be. So make sure you're comfortable with capture software. Make sure you know what you're looking for, or how to do it. And if you don't, talk to me. Take this checklist, print it out, put it on your desktop, guys. Police yourself. And even more importantly, write these words on the chart. Every time you take a trade, write those words. Write strong triggers, write termination conditions or path. And then more importantly, write inside of favorable large triggers on your entries. And you will never ask me, hey, Mark, was this the correct entry? You'll say, Mark, I got in at the area inside of favorable large triggers when I had momentum and a clear path. I know this was the right entry. Whether it worked or not, I know it was the right entry. And then here's the KISS plan. This is also in that zip file that I gave you. Guys, this plan came to be, I'm just going to ramble today a little bit. I had a gentleman call me one day, and he said, hey, Mark, I can't find a trade with this software. And I said, hey, Joe, Sally, Rex, whatever his name or her name may have been. And I said, so what are you looking for? What kind of, what trade? What are your rules? And this is what floored me. They told me, well, I'm looking for that trend trade that you talk about. And I'm looking for that 50-50 trade that you talk about. And I'm looking for that HVA trade that I read about. And then I'm looking for a momentum trade that I saw a video on. And I'm looking for a white bar trade that I saw John do a class on, and I caught a couple snippets of it. And I'm looking for that chili dog trade because that was rattling around. And he had like 6 or 7 trades that he was looking for. And he said, Mark, all I can really do is find losers. And I said, well, do you know the rules? And he goes, for which one? I said, for all of them. He said, I'm pretty good with it. I said, do you ever confuse them? He goes, all the time. I said, what about management? How do you manage it when you get in? Because each trade has different management, right? And he goes, I just look for lines. He had no plan. He was just looking to make money. Guys, you have to have a plan. You have to know what you're going to do. So this KISS plan is going to help you because it's going to give you something to do. Good morning, Cav. It's going to give you something specific to look for. So you should already have it. How are you taking pictures, Bob? It's just the Jing tool. It's the capture software. So here's the link to it. This is the one that I just used, capture software. And it's going to ask you to set up a screencast account. It's just an email. It doesn't cost anything. And that screencast account is how you're going to be able to put stuff into the room, into your spreadsheet. And let's go to screencast.com real quick. Let's see if it'll let me sign in. There we go. So there's my screencast, and here's what's cool. Is every image that I've ever taken is here in screencast. Whether it was capture, whether it was Jing, whether it was Snagit. It talks about what I did today, if I did videos, and I mean, it's everything. And Screencast holds it there for you, which is pretty cool. It's a great tool, and it's how you and I will have a conversation. So you don't need to buy anything. You've already got capture software. You can get that Screencast account. If you want to upgrade, I use Snagit. Because Snagit has the same capture button, but this one has all the bells and whistles. It has all the different text and all the different ways to do a call out and all the different shapes and stamps and fills. And it's got pins and highlighters and everything. And I can magnify. This is capture software with all the goodies. If you want to upgrade, I think it's $65. That's Snagit. But I digress. You have to have a plan. I met a gentleman once here in Austin. He was in from California. He's been with Nexgen for decade and a half. And he said, Mark, you know what? I spun my wheels until I had a written plan. And then once I had something to follow, life got good. So guys, this KISS plan is your stepping stone in your learning journey. This is your first trade. And it's designed to optimize your chances of success with the high probability trend trade you as a new user. Because the high probability trend trade teaches you to read your indicators, guys. And then through simulation, study, class feedback, and continuous practice. That's the recipe. When you can read your charts, you'll most likely change and grow your plan. Once you can read your indicators, you'll begin to see things. You'll find more opportunities. So learn to read your charts first. And the simple plan for consistency. And I'm going to say it again, and I know Chef blushes every time. Guys, I've had people come to Nexgen and sit in my room and get this plan on day 1. And by day 30, they were funded in those prop firms because they kept it simple. They kept it focused. And they took trades based on advantages and not their desire to get rich. And the simple plan for consistency is don't fight the large chart. And I'm gonna give you guys this best-selling novel. There it is. The Path to Financial Suicide, guys. How to Commit Financial Suicide. I love this. One Easy Step by John Novak. You didn't know he was a writer. He also creates software. And there's a little note there. Only one page has any information. All the other pages are blank. I think he put that because he learned how to do the mirror thing. Chapter 1, warning signs your friends are in trouble, guys. They're trading against strong triggers. They are being defiant and aggressive against the momentum created by the large crowd. Chapter 2, warning signs your friends aren't paying attention. They trade in determination conditions. Seek help immediately. Guys, if you can avoid those two things, fighting triggers, not trading in areas, if you can pull those out of the equation every day, you're better than 70% of the day traders in the world, guys. And you know exactly where the areas are and you can define momentum pretty easy. And then you just define your entry because great entries create manageable trades. Great entries reduce risk. Great entries maximize profit potential. And there's, when you Google, how do I know I'm becoming a good trader? One of the signs of becoming a mature trader is that you manage your risk long before you ever manage your position. And we manage risk through momentum. We manage risk through no terminations. We manage risk through great entries. And then once we take that great entry, once you enter the market, you've got to do something with it. And this is the part that is the scariest to most people. This is where people get sweaty palms and the pulse goes up and they're like, oh my gosh, I have something to lose. This is so mind-racking. And the reality is, guys, is management can be every bit as mechanical as your entry. Management should be nothing more than a series of if-then. And you'll craft a plan tailored to your personal goals based on your experience reading the indicators. Here's the management plan I'm about to go over. It's in the spreadsheet for you. So your management plan is designed to do two things in the KISS plan. The first thing it's designed to do is help you with stop placement, help you make good decisions that are based on what the market is doing rather than what you want it to do. The second thing, and I think the most important thing, is that it's designed to get you paid. So often I work with traders that believe every move has to be $1,000 move. Every move has to be a $500 move. And the idea, I've watched these guys fall on their sword and give it all back because it didn't hit that number that they believed the market should have gone to. Guys, the goal of trading is to get paid, to put money in the account. And your account doesn't know if it comes in $100 at a time or $200 at a time. It only knows whether you're up or down at the end of the day. So the KISS plan is designed to get you in where the market is most likely to continue. And this is what the whole management plan is dependent on. Because if I enter at the area inside of favorable large triggers, then my stop goes 4 to 5 ticks below those trigger lines. You engineers are like, well, which is it, Mark? Is it 4 or 5? Let's just say 5. It might be 4. It's up to you. What are you willing to risk? You know right where it has to go. I prefer to give it a little extra wiggle room because the market moves a lot. So if I'm in at the area where the market is likely to continue, then my stop goes here. And there's nothing for me to do. I have to sit on my hands. I have to stand up. I have to walk away from my desk. Not too far, though. And then I have to see what happens. It's either going to stop me out at that stop where the market should not go, and that will happen 20 to 30% of the time, or it's going to give me the reversal bar in the direction of the trade. So here's our next if then. If I get a reversal bar in the direction of the trade, then my new stop is 2 ticks below it for the long trade, 2 ticks above it for a short trade. And then there's nothing for me to do. I'm either going to get stopped out for a small loss, that's cool, no worries. Or it's going to go to my first target. Guys, the KISS plan is a 2 contract scenario. I need to write that into the plan. And your first target is designed to get you paid as quick as possible. Your first target is only $100 away from your great entry. And it usually gets there fast. And when it gets there, when you hit that first target, you're going to move your stop to break even. There's $100 in your account now. Your palms stop sweating. You start to feel confident through that memory of success. You've gotten paid, guys. You're a success. Children are singing songs about you in the streets. And you have absolutely nothing to lose because now you're break even. Break even may not be the best stop ever, but you will create a plan based on your ability reading the indicators. But break even gives you the courage to hold for the second target. It gives you the courage to remember that the only reason you took this trade is because of odds favorable momentum and not a darn thing in the way. And it's more likely to go to that fib than it is to turn against you. So guys, you're going to hold for the second target with nothing to lose. And if it gets there, guess what? That's a $300 trade. It is $200 away from your great entry. And if it makes it to your second target, you are $300 better off than you were when you entered that trade. And if that's the best you do every day, this is in that zip file too, that's a $75,000 year. Throw in a break-even trade, right? Hit that first target, go break-even. You're at 6 figures, ladies and gentlemen. $200 per contract is a 6-figure income based on your trading in the average trading year. You should already see the potential for that. And you've got to believe that the better you get at reading your indicators, the better you get at managing trades, the more patterns you begin to see, the more likely you are to realize how much money there is to be made in the futures markets, and that money is made through patterns. That money is made through advantages, guys. So practice on simulator, break all the rules, mess everything up, post them in the room for feedback, learn how to get better and read your charts. And then when it's time to test your plan, when you decide, all right, I need a skin in the game, and you get off simulator, there's 2 things that you have to know. Most of you will get off simulator before you know these things, but this is the easier way. You need to know why you will enter a trade, guys. Rules are patterns that have been proven to win more than they lose. Is all it is. It's just a pattern. And that same pattern, if you take 100 pictures, it should win more than it loses. And it's the process that yields the results. It's that flawless execution of insisting on advantages. That's what yields the results. And then you have to know why you're going to exit. And all an exit is, the only reason to exit isn't because you're scared, isn't because you think you saw something or you heard something in the background or something's going bump in the night. The only reason to exit a trade is either your target hasn't been hit or your advantage has gone away, and your exit rules should define that. Rules will help you remove emotion, guys. I don't say I hope anymore. I say these are my rules, this is my entry, let's see what happens. Let's see what happens. I know that I'll never be in control of the outcome. But once I know these 2 things, I don't care. I don't have to know what's going to happen next because I know more often than not it's going to be in my favor. Rules help remove the emotion, and they do it when you trust your rules. That's why study is so important. So this is in that zip file as well, guys. If I'm in a trend trade, I know why I'm going to enter. I just got the plan, and I know why I'm going to exit. And initially, it's the KISS plan. That's it. I'm just going to get paid, learn how to move stops. It'll grow. If I add that 50-50 trade, it's a different set of rules for entry. It's a different set of rules for exit. And then when I start adding trades, I keep adding rules and I keep adding things that I need to think about. So get good at one thing. Get really good at just one thing. I'm going to drop that zip file in there one more time so that you guys have it. Get good at that one thing. And then once you are, start working on the next thing if you feel like you need it. And if you're hitting your goals with one thing, why give yourself more to think about? So that's my first hour. It's my first hour every day. It's been my first hour for the last 4 years, guys. That's 101. That's the basics. What are my indicators? What do I do with them as a brand new user? You have your rules. You know what they are. We've broken them down individually. You know what they look like. You're going to study them to commit that look to memory. You know how to study them. You know where to put your study so that you can keep coming back and committing those looks to memory, because repetition creates repetition, or repetition creates recognition. You have the ability to simulate. And more importantly, you have the ability to take everything you do and drop it in this room for feedback. Guys, I am 5 years in with Nexgen, and I ask a question every day of my brother. Every day. Whether it's management, whether it's a pattern, whether it's something new, whether it's reinforcement, every day I go to my mentor, I go to my coach, I show him a picture and I say, hey, I need a little help. Would you mind? And he gives it to me. That's my promise to you. All you have to do is post in the room. We kept it very, very simple, guys. We talked about the high probability trend trade. I mean, we beat it into the ground. You know the rules, what they look like, how to manage it, all this stuff for the brand new user. The second page is the 50-50. So now you have a plan for 2 trades. Everything you need to be successful. The only thing Nexgen can't provide, and once we figure out how to do it, we're going to take over the world, is experience. I can't give you the repetition that you need. You've got to do that work. I can't give you the time in the market. You've got to spend it there. And you can either say, I'm just going to keep taking trades and hope for the best, or you can learn and follow the process that's been proven for decades, to produce results, to build day traders. Guys, we've got trades that we still teach that came about in 2004. There's your momentum trade from 2004. There's your trend trade. Right? Pull back to an area. Go, go, go. Take it to the next area. Guys, you've got it so much easier than the people in 2004. But you've got to learn the looks. You've got to learn the patterns. And I'm just going to throw this out there. You can use market replay and go back and replay the day. Fix your mistakes. Make sure that you are doing it correctly. Ask for help. And then the last thing that I'm going to give, and then I'm going to take a break, because I believe breaks are important, guys. Whoa, what was that? Get out of there. The key to everything is having a foundation. I don't care what you do in life. The key to everything is having a foundation. If I want to be a great golfer, I better learn how to swing a club first, right? If I want to hit a home run, I better learn how to swing a bat. If I want to be a great basketball player, I've got to learn how to dribble. I've got to learn how to pass, how to shoot. So create a foundation, guys. Build from these basics, and then try to get a little bit better every day. Try to get 1% better every day. That's the Japanese philosophy, Kaizen, of getting 1% better each day. So for you new users, here we go. I'm going to blanket you with very conservative rules. We're going to really focus on the recognition of advantages, and I'm going to give you a solid plan that optimizes your chances of success as you learn to read your indicators. So for new users, all termination conditions are bad. Bob the man, right now you're saying, crap, Mark's trying to keep me out of the market. Question mark, you're like, dude, but other people are doing stuff. No momentum is bad. Terminations are bad. No areas inside of favorable large triggers are bad. It's this blanket rule. This is your grandmother hugging you after a skinned knee, guys. They're not always bad, but blanket rules increase the likelihood of success, and that success is what keeps you around. Until you have the experience to know when to use an exception, to gauge your advantages, to make a choice, it's just safer this way for you guys. And then just like anything, the more time you spend with it, the more you'll see it opens doors for you. But you've got to learn the process that yields results. There's that phrase again. And the results seem to follow. And that's where the KISS plan comes in. If you keep it that basic, if you follow simple rules, and you're okay not keeping up with the Joneses, And I say this going into the second hour because you're going to see trades that are not high probability trend trades. Dollars to donuts, at least 3 of the trades Pete posted just now are not high probability trend trades. But you're going to be okay with that because you're simple. You're focused on you. Trading is a solo sport. If you're okay with that simplicity, you will find an extraordinary level of success. I've seen it for years, guys. I've watched it for years. And the further new users deviate from simple, the longer they take to learn how to be comfortable with pattern recognition. And this is gospel truth. The more you look for, the less you tend to find. But the more focused you are, the easier it becomes to find these trades. And then you just grow from that one trade. So question everything, all caps. If it doesn't make sense, ask a question. If you don't know what it is, ask a question. If you wonder if you did it right, ask a question. Guys, nobody has put me on my heels yet. Nobody has upset me from asking too many questions yet. I might wag a finger at you if you ask the same question 50 times and refuse to do the work to study. That's happened once or twice. But guys, I want you to ask everything. I want you to learn everything. And I also want you to give yourself a little grace because you are new. And it's okay to be new. And the only way to not be new is give yourself the experience to be experienced. So I will be back in about 5 minutes. When I come back, we're going to look at charts. We're going to look at your charts. We're going to look at live charts. And everything that I do for the next 2 hours, every chart read that I go through with you, every chart that I go back to, I'm going to talk about momentum, path, and entry. No matter what kind of trade you've posted, no matter whether you're advanced or whether you're new, I'm going to talk about momentum, path, and entry. And I want you to notice that these two tend to lead the way in successful trades. Momentum and path tend to lead the way in successful trades. And Cav put, this is a really simple system. All you have to do is listen to what Mark is saying and follow the 3 rules. The only people in the world that say listen to Mark are the people in this room. My family doesn't. Guys, I'll be back in 5 minutes. When I come back, we'll have some fun. We're going to look at the S&P, trading directly into termination conditions. And we're going to look at crude oil. And crude oil has a clear path and a little bit of a momentum, but not odds favorable. And it's right in between a fib and a divergence high. And who knows what's going to happen. So I'll leave you guys with crude oil. Oh, look at that. Momentum path, and it pulled back to resistance inside of triggers. Who writes this stuff? See you guys in 5. Go stretch your leg. Or your legs. It doesn't have to be just one. And let's get back to it. Morgan, I'm going to give you the I happen to be ignorant answer because I'm not in sales and I don't really deal with it. But when you signed your license agreement, you signed it for you, right? And part of that license agreement is for you to trade Nexgen software on a computer and a backup computer. And I don't believe it contains a clause. Otherwise, people would be like, well, I've got it and I'm in this room and 12 of my buddies are there. And we'll all just trade it like that. So I don't know for sure. I would double check with whoever your salesperson is because I really don't know the answer. I believe the answer might be no. But again, I teach people how to recognize patterns. So sorry, but I didn't want to not answer. Guys, I'm just saying, and I don't know if anyone's going to show it to me. Some of you got in right here. You're still making money. Some of you got in right here, and you already made your money and exited. Some of you might be holding for the next key area. I don't know, but there's an awful lot of opportunity. Yeah, Pete, I had a feeling you were one of them. Ron got in somewhere over here. If Marty's in here, he got in over here. Jen, probably still short with every intention of hitting a fib. Guys, that's one of the things. When I start to see your posts, I know your trades. I know your rules. I know what you look for. And the great thing is I'm not afraid to hold you accountable. I'm not afraid to say, hey, Ron, this isn't your trade. But I'm also comfortable saying, yep, that's Ron's trade, and there it is, as advertised. And that's one of the great things about this classroom, guys. It's not just learning how to read charts. It's also, you've got someone to hold you accountable to your plan. All I need is a couple pictures to know what your plan is. So let's go through and start looking at the pictures that you guys have posted. Wayne got us going, and this is cool. Wayne's a technical sort of guy. And a while back, we had a conversation. This is a market flow chart. And he goes, dude, what's the red box? And I said, Wayne, I'm not a techie sort of dude. I don't know what that red box is. And Wayne said, I'm going to get an answer. And we may have covered it that day. But when the red box prints, you know exactly where the range is that market's gonna go through. So I like it. Great place for stop placement. Pretty awesome. And then Miss Jen, you're watching S&P, not crude. So let's see what you did on that S&P. Let me zoom this in a little bit. Jen's young. She's got great eyes. But check this out. Odds favorable momentum, back of price, clears trouble, room to target. So what's she talking about? She's like, Mark, I know that momentum pushes a market in the direction of the trend. And this makes me happy. And Mark, I know that decisions are made at key areas. So I'm going to let every bit of price get south of that area so I don't get caught in the decision making. And when I have momentum and path, check this out, Mark. I'm just going to get in and I'm going to make money. And Jen, outstanding. Your consistency has been incredible. And guys, I want you to see something. Jen's not showing me any trades over here. Jen patiently waited to call her shot. And when her shot presented itself, she knew she had a statistical advantage and just gobbled it up. What a great job. And I'm telling you, I definitely do get proud papa syndrome. When people come in and they're new and I see them struggle a little bit, and then they just start posting and they commit to learning their patterns. Guys, I get giddy when I watch you find that success. I really do. It means a lot to me. And it's not me that's giving you guys success. I've got to say that 1,000 times over. It's you guys doing great things with basic lessons and finding your way. And it's nice. Steve Diego with the stack charts. Steve and Jen are in cahoots apparently because this is the exact same trade with the exact same rules, with damn near the same entry and almost the same exit. And it's all dependent on momentum and path. So for my newer users, for my demos, for my first weekers, second weekers, guys, I really want you to latch on to the idea that when you understand momentum and when you believe that decisions are made at key areas and it's better to get away from them rather than trade into them, you can find an amazing level of success. You can find an amazing level of success. Tommy22441, I see your picture in here. Did you get my reply to the multiple time frames or the multiple markets on one tab? I know that sometimes we're like two ships in the night and we miss it, but I just saw your picture. Okay, cool. Wanted to make sure. Guys, if you post in this room and it's not classroom hours, I still try to get you the answers you need. I don't always, but I try to. So Steve Diego, absolutely outstanding trade. You and Jen did the exact same thing with the exact same advantages and darn near the exact same location. There might be something to this. And then Pinyeski, he posted in the room, I'm posting this as punishment for breaking my rules. I love it. Should have just waited at the best entry spot. So, Paul, we knew it was going to go. No, we didn't. And I was entering after confirmation up bars. Should have just entered at the best area in between triggers. Absolutely. So, Paul, I'm not sure if you're in here listening. A confirmation bar means that your rules are met and now it's going in the direction of the trade. That's it. A confirmation bar means that rules are being met and now it's going in the direction of the trade. A reversal bar off of triggers is not a confirmation bar. Why? Because it didn't go to the area. It's not coming from an area, and an area is one of the key words in your entries. This is not a confirmation bar. This is a holy shit, it looks like it's going without me. Let me jump in. Damn it, I just lost a trade bar. Pardon my French, but that's exactly what it is. This one that came off of the areas, that's a confirmation bar. And it never went 5 ticks below. So there's your next confirmation bar right off the area. And what stinks is you use up all your wishes before the best spot, guys. And we're going to talk about this. When you know through a little bit of study, let's talk about why rules are rules on entry. I think Paul's probably already gone on to work today. When this reversal bar happens, and this is a lesson that we talk about every day, so new users, all we're doing is we're reinforcing rules for you. The market may retrace anywhere between the top of those trigger lines and the bottom of those trigger lines. And no matter where my entry is, my stop goes about 5 ticks below the trigger lines. And that's it right there. And it doesn't get hit based on that recipe. And this is one of the things that happens. The market may also, we'll make it a different color, it may bounce from a fib. It may bounce from a fib and a mid-band. So this box represents where the market is most likely to continue with the trend for, guys. And the box is very specific. And one of the reasons I love a confirmation bar, but it doesn't guarantee a winner. That confirmation bar from the area, that's a great sign. Absolutely. Awesome. Whatever. Dig it. But check this out. 1, 2, 3 divergences. It doesn't guarantee a winner. It only gives you a place to put your stop. So the correct stop on this one is about right there. And it still would have been a loser. But guys, if you just believe that a reversal bar is your entry, it's not your best entry. I love the second entry, and if he hadn't taken the first entry, he would have been okay taking the best entry. And he said in the room, he said, I should have just waited for the area it triggers. Should have just waited for the area it triggers. And I agree with that 100%. But Paul's an outstanding trader. And this is just a great way of reminding ourselves that we can make mistakes, but you got to go back and analyze them. And you've got to be okay with them. You've got to be willing to say, wow, I didn't do this one. as well as I could have, let me write myself a note. Let me tell myself that there's a better way to do this and commit to doing it that way next time. All right, Miss Cindy. Cindy is her husband's lawyer. She comes in and she posts his trades. I think she does it because I tell her to go kiss him on the cheek when he does well. So he's like, hey, post another, post another. Guys, large chart. Odds favorable momentum. 100% strong triggers. Not a good top, Cindy, because it's not a termination that reversed the market. Does that make sense? Not a termination condition that reversed the market. This is not a good top. This is a weak top. And then tell your husband, this is not a 50-50 trade. This fib stopped printing 1, 2, 3, 4, 5, 6 bars. It's rear view mirror at this point. The software has recalibrated and it has decided that that fib is no longer a part of the equation. So this is actually strong triggers and a clear path. I love it. And look at that entry. Right at the area, right inside of triggers, and then let's make some money on the way down. Beautiful. Absolutely beautiful trading. Go give him a kiss, Cindy. But give him that lesson on strong tops. Good stuff. All right, let's see who's next. And remember, newer users, you are cordially invited to comment or ask questions on any chart that's posted in this room. It doesn't have to be yours. Chef, there was that one beautiful large chart, every rule met, perfect entry. Actually, the entry is like 2 ticks late. And then this was the crash. Odds favorable, clear path, area inside of triggers. I like it. Chef's mental mind. This is, guys, you can learn something from this. Besides not having a good bottom, I think this was a good trade. I put the trade on, and when I tried moving my stop up, NinjaTrader crashed. Glad it was a sim trade. Might want to consider creating an ATM strategy with a shorter stop. I would agree. Is that 24? How big is that? From 98 to 92.6? Okay, so Chef, you're using the NASDAQ stop. You're using the NASDAQ stop. For crude oil, for S&P, that's what the 12 tick stops are designed for. 12 ticks is more than enough. But let's talk about something real quick. And let me take the picture. So Chef, we're going to go back to 101 for a minute. Let's see, from 97 to 95.75. This is 5 ticks, Chef. And let me put it over here. Boom, boom, boom. But the number is an arbitrary number, right, Chef? If I gave you 10 pounds of flour, that's not what goes in the recipe. You're only making a small batch of cupcakes, correct? So where does your stop go? Your stop goes 4 or 5 ticks below those triggers. You don't have to leave 6 points of risk on there. Oh my goodness. Put your stop where the market shouldn't go. That's where your advantage is gone. And then once you got the reversal bar, Chef, it's right there. You literally had 8 ticks of risk on this trade once the reversal bar hit. Does that make sense? Guys, your ATM strategy, that initial stop placement, it gives you reaction time. That's all it is. It gives you reaction time to put, wow, look at that termination condition. Love it. It gives you reaction time. So if I go short, it's into a termination, my stop goes 4 or 5 ticks. That's it. Even though it started at 12, that's where the market shouldn't go if it's going to be a winner. Get the hell out. Take small losses. Because you guys are so stinking good at picking entries, you don't have to risk a lot. That's why we use the small chart. It's a great trade, Chef. The only thing I have to say about it is that what if that mid-band created the bounce? What if that mid-band held? You would have missed your entire perfect trade by having an order below the mid-band. Does that make sense? And I know this is true because someone posted a picture the other day of it. With this look, I am always 2 ticks above that highest point. Always 2 ticks above that highest point. And what happens, Chef, and tell me if I'm right, is as you were anticipating, you probably already had your limit order in place, hoping for the pullback, and that mid band comes up as price comes down, and if you don't adjust it, you will end up on the wrong side of it. That I see that. I used to do that a lot because I would put it in the perfect spot. Yeah, so don't be afraid to click that and get it where it needs to be. I'm telling you guys, I have done everything wrong that you could ever hope to do with this software, and I've found a way to fix it. And I will share that with you every time. All right, I love this. Morgan said, trying to decide where to eat dinner, courtesy of the S&P. How's that for indecision? How's that for no reason to take a trade? That's a market flow chart. And Morgan's like, man, my triggers are flat, and look at them dance. If you guys don't believe that decisions are made at those key areas, look at the fight between buyers and sellers on Morgan's chart. There's one big line that they're dancing around, and notice that they didn't get above the red line here or the blue line here. You guys know exactly where this consolidation is most likely to happen. You guys know exactly where they have to break out to take, right? Morgan's like, okay, above the red line, Chinese. Below the red line, we're having lobster. Jen, you went and made a cup of tea. I love it. What a very British thing to do. You got Chinese last night? Yeah, I'm going for lunch today. My son's not working. He's my lunch partner. My wife has celiac, so she won't do it. I love cheap Chinese, so I guess you're doing lobster today. All right, Gary says HVA trade. And I have no idea. Coming from the bottom. Here we go. Termination. That's a rule for the HVA. Triggers roll. Not quite. Broke rule number 2, Gary. And I don't see an HVA line, so it can't be an HVA trade. But that's okay. I know you have a good plan. Well, don't do that to me. Don't say see next chart. I don't see a next chart. Where's the next chart? I've got one in there, and I don't see any other posts from you, Gary. Well, shit. How am I supposed to follow that? So there's your next one. That's the low. I don't know what your rules are for a 10 a.m. low. That means absolutely nothing to me, but that looks like the low at 10 a.m. Says, by the rules, 10 a.m. low is here. Why? Because it's 9:48. That's 10 a.m. I don't know your rules. I love the trade. By the way, I love the trade. But I don't see a green HVA line. So it's difficult to call it an HVA trade. And guys, everybody has a different plan. There's nothing wrong with Gary's trade. It's a beautiful trade. But it doesn't fit the rules for an HVA. Triggers didn't roll. There's no HVA line to trade from. And it's okay. Well, this is a different chart. I don't know how many charts you have. But you still entered before the HVA ever formed. You took a white bar trade. You took that let's use the breakout bar and the fast triggers rolling trade. You anticipated the HVA beautifully. And this is a trade that my brother used to teach in a classroom. That HVA didn't print until that next up bar. You were already in and on your way to Moneysville. Great job. Great job. I love it. I'm a fan. And Gary, I'm going to do this only because you've been around the block a little bit. 1, 2, 2, 3, 4, 5, 6, 7, 8 trades that didn't get posted because they didn't work. And then one trade that says, hey, look how big it is, posted in the room. If you're new, and guys, Gary's done this long enough. He doesn't have to post every loser. He knows why he lost. Probably a little impatience. But if you're brand new, don't hide these from me. Don't hide 8 losers, eight trades from me, and only show me the one that makes you look like a badass. Yeah. But guys, this is where the lessons happen. And Gary, thank you for showing that. And just for those of you that don't know, I see everything. I see everything on your charts. I see the trades that you took and didn't post. I see your 50-point winner and that you're still down $1,000. And I will call you on it because this is where the lessons come. This is where you get better. Simulator Huevos. This is where we get to fix and correct. And trust me, guys, it sucks to post losers because it means you're human. But the losers are where you and I have breakthroughs. The losers are where you and I have aha moments. The losers are where you and I identify what's hurting you and try to work on a plan to fix it. And there's a lot of you in this room that we've done that work, and you're in such a good spot, not because I'm great, but because you had the courage to post in the room and to ask for help. I've got a huge ego, by the way, and it's hard for me. All right, not the best looking chart. Trend is down, lower highs. I agree, 100%. Let me see where you got in, 78, 77. So I like this, and let me show you why. This is Pete. Pete's looking at his large chart, and he's like, man, I've got momentum. And all my triggers are below the area. And it looks like they printed a couple divergences and they just pushed up. And that happens sometimes, guys. That happens sometimes. And Pete says, look at this garbage. Look at this. Triggers don't match. It's yucky. It's nasty. Things aren't that great. But also look at this fib that may hold, right? And Pete says, I'm going to let those small triggers start to roll. And they head faked him a little bit. And he goes, I'm going to let the dance in. And then I'm going to find a way to go with this large chart. And that's exactly what you did, Pete. And the patience of not taking all those trades when it was super iffy. Pete says, my large chart says down. I'm going to wait until I can find something that comes in to support that large chart down. And then I'm going to take my entry and I'm going to go in. I love everything about this trade because this is a chart read. This is not a high probability trend trade. This is a gentleman that's taken a lot of time to study his rules and patterns and found a way to capitalize. And Kurt, the only reason I can do that is because my brother used to do it to me. My brother used to do it to me. I would only show my brother winners, and he would go, hey, dummy, what about these 17 losers? I was like, oh, man. And you know what happened, Kurt? Because I only showed losers, I never got feedback. And because I never got feedback, it cost me $5,000 in 2 hours the first time I went live. Because I didn't have any freaking idea what I was doing. And I was too proud to let my brother correct me in front of a group of strangers. And true story, I've only met about 5 Nexgen clients in my life. And none of them mentioned any stupid trades that I ever took, which I appreciate. Trend still down. I recognize that it was directly into a turn, but I had 10 ticks of room. So if I got half off and slide stop down to break even, if it breaks, it breaks. If not, I'm still a winner. And if it just rockets up, you're out 6 contracts. All losers. Guys, only you can decide whether or not you want to trade into a termination condition. Only you can make that decision. Pete chose to. My guess is because he still had strong triggers and because he had no divergence. And he said, I'm willing to risk maybe 10 ticks to see if it goes. But dude, we're way more than 5 ticks beyond those triggers, which means you had at least 76, 72. You had at least $420. 6. So you had to have 7 ticks stop, right? Because it went to 71. That's 5. which means you risked 420 of your hard-earned dollars trading directly into a double termination condition without odds favorable momentum. Is it the wrong thing to do? No, it's Pete's thing to do. My job is not to police Pete. My job is to show the rest of you this is actually a termination condition. This is a low probability trade. This is an arbitrary stop placement because Pete made the decision, this is what I'm willing to risk based on the pattern that I recognize. I'm going to tell you right now, Pete also made a metric butt ton of money in the move before. He had a little wiggle room to take a chance, which is pretty cool. Because when you're taking the right trades and your P&L goes up, every now and then you might say, I know this isn't the perfect trade, but let's give it a shot. I can count enough advantages to give it a shot. And of course, then you got a higher divergence, then you got a divergence off the fib double termination, and you still held that trade. And then you finally get out when it creates a pivot stop out. Right on. You felt there's some schools of thoughts that'll tell you the market doesn't give a crap about your feelings. You did find 10 ticks right there from 66 to 56. And then you almost gave back 10 ticks, right? And then you held it again to the fib, and then you gave it back. So it wasn't the 10 ticks that you were after. You got them. You could have taken that, made $600, got the hell out, and said, whew, I'm glad I didn't get that reversal. But you got to trade your way. And your way is a good way, Pete. But because of the classroom, I'm obligated to point out how it doesn't fit. Steve. Mark knows what you're doing because Nexgen installs secret video cams in your room, but only turns on for your trade. There you go. That way it's a little more, it's a little less creepy, I guess. And then Chef Gary's right. Go through the clean out and reset that database, repair your data. Get rid of any glitches. I did that this morning, actually, Gary. I thought of you. So Chef, go to your NinjaTrader 8, go to database, and just get rid of everything in the folder. That's not the normal clean out. Get rid of everything. Get rid of the temp. Get rid of, and then get rid of, from NinjaTrader 8, get rid of everything inside of the temp folder. And then in NinjaTrader 8, get rid of your recovery, and even your workspaces. And then do that thing Gary said, and then bring it back up. I did that, and I'm running rock solid. I had to do that this morning too, Morgan. And you just have to sometimes, guys. Anything electronic has the potential to corrupt. It's just data. It's electronic. So good stuff. All right, Pete. Trend still down. Higher lows. 35, 40. You got in at 45. Which means it looks like you got in directly into a termination condition again with weak triggers. And again, it works out. Nice job. It's not wrong for you. That's 2 in a row into terms that produce results. So this is what I'm going to say about that. I had a client once, guys, forever ago, many moons, and he found a really solid level of success doing what he was doing. There's no momentum. The triggers are inside of the large, Pete. I'll challenge you on that all day long. The smalls are inside of the large. You have squat for momentum here. So I had a client, let me tell my story, and he would post in the room a lot, and he won a lot, and he would trade into termination conditions a lot. And then he wasn't in the room for about 2 weeks. And he came back to the room and he said, you know what, Mark, I had to take a break because my trading into termination conditions finally backfired on me. And I lost nearly $60,000 last week trading into those termination conditions. And then in the room, he still made great money without doing it. he said, oh my gosh, this was the wrong thing to do. Let me change my approach. Let me go back to not trading into these lines. And he still found an extraordinary level of success. And then he started believing that termination conditions without momentum couldn't hurt him again. And I don't know what came from it. But guys, it's a very real story, and a lot of us identify with it. You get lucky breaking rules, but that luck tends to run out. And for this gentleman, it was $60,000 in 1 week that he gave away. $60,000 in 1 week. And he resolved not to do it anymore. And he told me, Mark, I shouldn't be doing this. And his trading was great for a while. And then Pete, very much like you, he started showing me these trades again. And I just hope that his luck doesn't run out again. Divergence, I like it. Weak triggers. And let's go long. Not from an area, against the trend. Pete, you took the short again without momentum, but I like it. That's not a long. 2 divergences. You said fib may hold. So you got in and you got out. And third divergence. You exit. And then after 3 divergences, you say, whoa, that's a termination condition. It may push up. And you took a little snippet there. Nice. A lot of trading today, Pete. Good job, dude. You got your plan. I won't question it. It's your plan. Good stuff. Great pattern recognition. Your chart reads, sticking to your guns on what you do. I dig it. Run. Momentum. Not even momentum. Right? Not even momentum on this one. There's that same weak trigger look. And Ron's taken this one, and this is a little outside of Ron's plan, and Ron says, you know what? When everything says down, when I have so many bars in this strong trend, I'll see if I can get a snippet off to the next one. Waits for the trouble to clear, finds a way to do it. Stepping out to study rules and videos. It's 9 a.m. Eastern, Bob. 9 a.m. Eastern, we get going. 12 p.m. Eastern, we stop. First hour is always rules. First hour is always rules. And Bob, I'm just going to throw this out there, a little cautionary tale. From the Nexgen website on YouTube, there's a million videos. There's a million videos, and there's a million ways to confuse the ever-loving bejesus out of yourself. So if you want to study videos, this 60-second video playlist is pretty outstanding. It's short, it's to the point, and it really revolves around a lot of the lessons that we talk on the basics for new users. So just a little snippet for you there. When they're stacked, they're stacked. Right on. Awesome. Can't wait to see you tomorrow, Bob. Thanks for being here. And then let's see this next one. Oh my gosh, check it out. It's momentum and it's path. And there it is. Ron, that's what yours usually look like. Odds favorable. It's hard to stop odds favorable. Room to the target. And just take a little snip, right? We have 2 Bobs. But Bob, you're the man. Bob B the man and Bob B. You're both Bob B too. Parents love alliteration, don't they? Great trade, Ron. Momentum and path. Get paid. Momentum and path. Get paid. Even Pete on that one. Momentum and path. Get paid. Almost path. Get paid. That's the goal, right? The goal is to make money. Find your way to do it, guys. Find your way to do it. Good example of gap theory. Strong bottom. Gets up to the mid-band, large triggers don't follow, and sure enough, it retraces right back to the large triggers. That was the same thing we talked about when we talked about entries, right? Price loves to come back to the large triggers. Well, there's one of those patterns you're going to begin to recognize. Thanks for that picture, Pete. You know what? I'm going to steal it. I'm stealing all of Pete's pictures today. Guys, these veterans are going to create some awesome study material for you. So let's do that gap theory picture again. It's another pattern, repeats itself multiple times every day. All right, let's see who's next. Dun, 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 dun. All right, Rob. Yes, there's something wrong. Rob, great recognition. So what this is, man, is you've got a data glitch somewhere. That's okay. This is the easiest fix. I know I did, Pete. Keep posting them. I appreciate it. I really do. So Rob, anytime my triggers look like this, for me it usually happens on a Monday. I don't know why. There's something about the fresh week data. Oh look, guys, an eye crash somewhere in there. All I do is I right click on my chart. Whoops, my caps lock is on. And I reload historical data, or I just right click on my chart and I hit F5 and it rewrites the Ninja script. But you're absolutely right. That's not the best look. Not at all. Whoops. Let me connect to some data here. Oh my gosh, it didn't save my workspace. There we go. So I will right click just like this as soon as it lets me, and I'll reload all historical data, and Rob, that usually fixes it for me. That usually takes care of me. Or you can reload the Ninja script, which is F5 is the shortcut to get that done. Look at that gap. Boom, bang, bing. Love it. All right, guys, I'm going to take 5 minutes, stretch my legs, do what I do. When I come back, the classroom belongs to you. We have gone through every picture that has been posted. I've answered any question that's been asked. So, guys, I want you to come up with more questions. If you've never posted a picture in my room, I want you to post a picture. I want you to open up your capture software. Oh, let me find it. Let me find my capture software. And I want you to do this for me. I want you to open it up, and you're like, but Mark, I don't have any trades to show. That's okay. Watch this. I love puppies, guys. I'm a big fan of dogs. So go take a picture of a cute little puppy. Copy that picture and flood my room. Chev, have an awesome afternoon. Okay, James, I'm going to get you right now on that. So you can't get the alphabet to work? Let me show you the most common thing. Let me go to the call out. Let me take a bigger picture because that one's super small. I've done this one a million times, James. Check this out. So once I take this picture, this happened to me and it frustrated me for 4 days before I finally asked for help. If I take the call out and I make the box, are you good up to that point, James? Cool. Check your font color. What I was doing is my font color was the same as my box, and no matter how much I typed, I couldn't see it. And then once I changed it to an actual color, there it was. That's what got me. See if that one fixes it. And that's pretty common. And I don't know why on earth it would ever let you put them in the same. Yeah, I remember Rob had one, and it was funny because the spell check had like the wiggly red line, but nothing was typed. I was like, wait a minute. And Rob, I think it was your chart that helped me realize that this was a lesson people might need. It's important to post dog pictures in here every now and then, guys. It really is. It's good for the soul, isn't it? Oh my gosh, look at these cute puppies. And crude continues down. Guys, I'm going to stretch my legs real quick. James, let me know if that worked for you. No, you don't need to buy a dog. You're going to get me on a tangent. You need to go rescue a dog. Go save a dog's life. I'll be back in 5 minutes. When I come back, guys, it's open season. Whatever you want to talk about. I'll see you in a few. I like the head on the desk. All right, so let's go through it. Let's figure this out. James, do me a favor. I want you to be real active through this process. I'm going to take a picture. So you can take the picture, yes? No worries at all. You're good? Okay. So the call out, you can get the box. I'm going to show you the second one. After I do the box, James, I don't know if you can see it on the screen, but do you see the cursor blinking? See if I can make it bigger. See the cursor blinking? If I click anywhere else, it goes away. And no matter how much I type, nothing goes in there, no matter what color it is. So do this for me. Make the box and click on it. Double click and make sure you get that cursor and then give it a go. That's the second thing. A lot of times people they're like, okay, I need to write something. Oh no, hold it. I need to move it over here. And that cursor goes away. Let's see if that gets it. And if not, my go-to is I'll just reload it. I'll go through and delete it and reload it. What am I looking for? TechSmith. There we go. And I've had to do that before as well. And there's the link if you have to go that route. But make sure that cursor's blinking. Oh, puppies! And that may help. Let me know. And we can also, and everyone's like, oh, I don't want to bother them. I don't want to bother them. Hold on. Let me copy that link real quick. It's not, okay, so double click on it then. James, double click on it. When you take the picture, if it's not blinking, I think we just figured it out. Not blinking, double click, quick click with the left mouse, now it is. Let me know if that works. I bet that's what it is. Because if I click off of it, you can hear my keyboard. It's not putting anything. Once I double click, there we go. Look at us playing tech. Jonathan. I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. I like that. Do the same darn thing over and over and over and over until you are an expert, guys. That's day trading. Day trading is the same thing over and over, the same look over and over, the same pattern over and over. Good stuff. Thank you for sharing that. Guys, I love little wisdom snippets. Feel free to share them in the room anytime you want. And I'll tell you what, if you guys will excuse me 1 second. Ron, have a good one, man. Made enough. I like it. Stuff to do. Have fun. I will see you in the morning. Guys, excuse me 1 second. My dog needs to go talk to a man about a horse. She's ringing the bell out back. I'll be right back. Back and Kurt reinstall it. All right, James. And James, oh, what I did copy that I wanted to put in the room is Let Jason jump on there. Let him help you out. We have the best tech guy in the world. Just put a ticket in and go, hey, I need to be able to post pictures in the room and write on them, and I'm struggling. Do you have an easy fix? There is nothing that's been broken that he hasn't already had to fix, and the only things that he typically can't fix are things that aren't broken. So don't be afraid to use tech, guys. All right, so Kurt says, check it out, Mark. Odds favorable? Yeah. Clear path? Uh-huh. Strong bottom? You betcha. And you didn't take the pullback to support. You got in with confirmation. And you took it right up to the fib. Great job. Why the confirmation, Kurt? Why did you wait for the reversal bar and not just get in at those one-to-ones right at the triggers? We talked about it yesterday, right? There's a time. There's definitely a time for confirmation. That's okay. NASDAQ's fast, man. It's a beautiful trade. It's a beautiful trade. And I know that you have a solid plan. And I love that look, and it sets you up for nothing but success here. Great job. Great trade. And look at that. You knew where the market was likely to go. Right? You knew where it was likely to stop. You also knew right where it was likely to continue. I should talk about that someday. That you guys will develop that ability. I should throw that in. There's got to be a trade that teaches it. All right. Jen, in this case, you decided to wait for price to clear that divergence. Okay. Can I ask why? A divergence that had already stopped printing from an hour ago worked its way into your head? Didn't want to lose. So you're saying that you can control whether you win or lose by making up rules on the fly? Is that right? That's amazing, Jen. If only we were in the same room so that we could high five, because it's... Guys, you're going to do this, right? Jen, your rules said let it break and go. So what? Here's a good, and I love this. I'm only watching the S&P. I can't watch two. Crude oil. So here's one of the great things, and Jen, you'll appreciate this, I hope. Hold on, let me get that other one off. Oh, I can't see the triggers, so maybe it takes 2 bars. Do I have odds favorable momentum? I don't, do I? Did the back of the bar clear that fib? It didn't, did it? I don't need to look back. Not for your trade. Not for the chili dog. I don't need any of that stuff back here to know whether or not it's time to take the trade. Isn't that cool? Less is more. Less is more. Jen, I will talk, well, I don't do it anymore, but I would talk myself out of a million great trades. Because, and this is the thing which is why. Steve, have a good one, man. Great trading today. Jen, you said didn't want to lose. That's the truth. That's okay. Scared, made money, didn't want to lose. Nobody wants to lose, Jen. And this is for everybody. And this is gather round, children. Let's have a campfire talk. Nobody wants to lose. Nobody wants to take a trade and have it not work out. Why would you? Right? Why would you go, oh man, I can't wait to lose today? But what is one of the core realities of trading? Is that you will lose, right, Jen? You will lose. But you know how to win more than lose. Otherwise, you wouldn't have a PA account. So did you change the rules to get funded midstream? Did you break your rules to get funded? Do you think that PA account knows that it's a PA account? Jen, you are a spectacular trader with an amazing level of patience. And money is scary, isn't it? Something to lose is scary, and people do that. Did you know that most people don't get a payout in those funded accounts? Because they change their entire plan once they get there. More people blow out their PA accounts than get paid because they change everything. And even more so, more people, I've done a lot of research on these funding companies. More people get their first payout. If they get their first payout, they never get a second because they're so focused on the money instead of the process that they blow out chasing it. I see it all the time. I've done it myself, Jen. I've done it myself. And I'm glad that you wrote that too, because it's real. It's such a real part of trading. Losing is such a real part of trading. And once you learn it, once you learn that it's okay to lose, just lose the right trades, you're going to be all right. Your takeaway is follow the rules. Don't create new ones in the moment, right? You're welcome, Jen. Thank you for posting that. And again, I've got nothing but respect for your abilities, but you're still human. That's what makes you lovable. That's what makes all of us lovable. We're still human. And we're prone to fear, and we're prone to adrenaline and all those things that can change stuff up. So I like it. And the fact that you have the courage to post it creates a great lesson for everybody in the room. Uh-oh, I went to my untitled workspace. There we go. And then Rob, you're all good now? Outstanding. All right, what do you guys want to talk about? I told you, class is yours last hour. Hey, man, Sniper, nice to see you back in here, man. Hope you're doing well. I like it when I see names come back that I haven't seen in a while. Good stuff. And Decrypt, I am all over that lotus in your picture. It keeps distracting me. I keep looking at it. Sometimes the market's going to go down even when your indicators say that it's less likely to, guys. That's a part of trading too. Did you know that? One of my favorite things, I'm going to open up my trading view, is every time you open up trading view, for those of you that knew it, that use it, you know this. Every time you close it, well, of course it didn't do it there. Maybe I didn't have it open long enough. But every time I close my trading view, it's pretty cool. It gives a message. And just like a little cliche saying or something. And there's some really good ones. And I guess I'm going to share those since you guys aren't asking questions. One of them is the market doesn't care about your position. I've seen that 100 times and it makes me smile every time. Because it doesn't. The market doesn't care what you want. Another one is every time I think I have the keys, every time I think I have the keys, they change the locks. That's another one. 8 range. It depends on your plan though, Philip Cox. Do you have a plan that needs a range chart? If you do, absolutely, 8 range is the one. All right, guys, we are officially strong trending. We are 30 bars in the same direction. No reversal bars. So we're getting into that point that as long as I have a clear path, I'm going to look for opportunities. So Philip, you'll need the market flow chart for HVA trades without a doubt. You'll need the market flow chart for that coming off of an area white bar trade that John Novak teaches. You don't need it for a high probability trend trade, nor do you need it for a 50-50 trade. And I don't know if you were asking about the trade or if it was the size, but yeah, the size is 8 range. And I know you've been around long enough. Range charts tend to talk people into bad decisions that don't believe in their rules yet. It's just the case because you're like, oh, it printed an arrow, I have to go short, and you'll skip all your rules. So make sure that you're being focused. All right, let's do scaling. Check it out. So there's a million ways to do it. If I just click on the chart, it doesn't do it. I can go forward and backwards if I click on the chart. But it won't let me go up and down. It won't move the chart up and down. To move the chart up and down, I have to hold the control button, and then it lets me move up and down. The same is true. I can tighten it. If I click on the price, I can go up and down and tighten and expand. And if I hold control once again, it'll let me move the whole chart. The same is true here. I can tighten it just by clicking on the timestamps. But if I hold down my control button, it's going to go back and forth. So that's the basic. And then there's some other cool stuff. Has anyone ever opened up their NinjaTrader and it looks like this? And you're like, wait a minute. I have indicators, but there's no price bars. There's no triggers. What the hell? This capital F in the upper right-hand corner, F is for fun. Click it, and it'll bring you back in, and you're there. Sometimes you'll say, like we did right now, price is right here, but nothing's moving. It's like it's stuck. This white arrow will bring you to the most current bar. And then that is the fish that I give you. And now I'm going to give you the one that teaches you to fish as well, straight from the website. If we go to the software guide, there we go, moving and scaling ninja charts. Oops, Control V. There you go. Did that help, Philip? And there we go. Every time I exit out of TradingView, it gives you some sort of inspirational message. Plan for the long term. We'll see how many we can get today. I think it's brilliant because the stuff that they say is pretty spot on. All right, guys, we got 20 minutes. Don't make me go get Chinese food early. They're not even open yet. Let's do this. This is how you get people to participate. What's your favorite Chinese food dish? That's where everybody starts typing usually. Oh, wow. You want to talk about me not trading? All right, let's do this. Mongolian beef. General Tso's. That's me. General Tso's and Kung Pao. Yeah, those are mine. Fried chicken in a spicy brown sugar sauce. How do you go wrong with that? Or Kung Pao. Those are my two. I alternate between the two. I love sweet and sour pork. I really do. I'm a big fan of sweet and sour pork too. Red curry with cashews. I don't think I've ever had that. I've always avoided curry like the plague because I hated the way it smelled. That's Thai, yeah. And then in the last couple years, I've started liking curry again. Aww. Doodles. Very nice. Because I love it. I love pictures of dogs. I have so many pictures of dogs on my phone, Jen, of my dog. Because she's freaking adorable. Szechuan chicken. Use curry when you make popcorn. Do you really, Philip? That's interesting. Do you drop it into the oil and pop it, or do you just kind of sprinkle curry over? This is what we do when we stop talking about trading. I don't know that I have any pictures of my dog on the computer. And my dog, just a heads up, guys, is cuter than your dog. All of them. It is what it is. It's a fact of life. I don't want you to be upset about that or anything, but it's kind of where we're at. But she's a jerk. She's an absolute jerk. Earlier this morning, I had to send my wife a text. She walked into my office, and just farted and walked right out. I love it. My brother's going to come into the room like, dude, how come I came in and all I saw were pictures of dogs? Because dogs are awesome. There's your gap theory again. Price reaches Fibonacci resistance, and those large triggers are all the way down by that reversal bar marker. It's likely to close the gap. Likely to close the gap. Not guaranteed, but likely. We'll see what happens. Okay, what else? So things that we learned. All right. Dance with the girl you brought. That's a great lesson. All of you are going to do things that get you funded. Oh, I love this dog. Pete, I can never get too many pictures of this dog. Now I have to take a picture of my dog. Everybody has a plan. Yeah, oh my gosh. My dog would just lay there. I'm like, oh, look at the picture. Look at the picture. I love the picture. I thought I had some on my computer. I don't even know. I had to clear out my phone a little bit. I was running out of room. Watch this. I'll put one over to Skype, and my brother's going to be like, why are you sending me pictures of the dog? And I'll be like, because my dog is freaking amazing. So I think today's lessons, guys. 1, you have a plan. Stick with it. Your plan has been proven to win more than it loses. Your plan is verified. It's validated. It's everything that you need it to be. Stick with it. Right? Stick with it. Aw. Wayne, what kind of dog is that? Mini Aussie. Okay. So there we go. There's my girls. The big one is my son's dog. But I ask because this one's my dog. This is Ellie, and she's got those eyes. She's like part corgi for sure. And then we think she's some sort of Australian Shepherd or cattle dog or something because she has the exact same eyes. Those super blue eyes. Oh, look at that, guys. It closed the gap to the large triggers. There's a pattern. Yes. Okay. Definitely Australian Shepherd going on. There we go. And there's my big ugly leg too. If you ever wondered if I was tattooed, I got a couple of them. That's Ellie Island. That's the ottoman in the living room. That's hers. Aw, Pete. So cute. I love it. How was class? It was great. We talked about our dogs, but we did learn about the gap theory. We talked about momentum. We talked about clear path. We talked about entries. We talked about trusting plans. I feel like we had a pretty good day. Hope you guys learned something today.